Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, March 29th, 2022. I hadn't done one of these in a while. I kind of forgotten about doing the video format. We do the podcast now via IBKR, Interactive Brokers Traders Insight Radio. We do enough other content, and so I've been doing a lot of written stuff, but someone actually reached out and said, how come you don't do videos anymore? So here we go. Somebody asked for it, so sorry for the rest of you. You have a video. Today is an interesting day. We come in, we see the markets well off their highs. We opened very strongly on what is undoubtedly positive news, assuming it proves to be true. Markets were encouraged by the idea that there were some real progress that appeared to be made on the Russia-Ukraine story, Russia backing off of their aggression toward Kyiv, possibility of a more lasting ceasefire, and markets reacted accordingly. Oil came off, and the stock market rallied. S&Ps were up about 50 points shortly after the opening. This is generally good news, right? I mean, we don't like the idea of an armed conflict, but what we're also seeing is how much of a war premium was baked in here. At this point, we'd more or less shrugged off the idea of Russia-Ukraine having too much of a lasting effect on markets. Speculation had returned. We had seen, yes, bonds continued to U.S. Treasury rates continued to rise, which is the opposite of a flight to quality trade. And so to a certain extent, there wasn't really much baked in. There's still a bit of an oil premium, understandably. But markets had sort of gotten used to the idea of, okay, we'll price in $100 oil, give or take, 100, 110. It's not pleasant, but we can deal with this and we'll move on. So as a result, we're getting a bit, I'm not going to say buy the rumor, sell the news, but by a fairly muted reaction, again, to what is otherwise good news. I think it's hard for a lot of people to appreciate just how ripe for speculation the market had become and how sentiment had turned on a dime. I did a segment with NASDAQ yesterday, which is a relative, we talk a couple times a month, NASDAQ and I, and we discussed, how the term structure of volatility had changed dramatically. You see me reference this a lot of times via the VIX curve. I referenced it in slightly different terms using QQQ yesterday, again, because it was a NASDAQ forum, so I wanted to use one of their products. But what it's meant is we've seen VIX drop like a stone, and the curve change in shape dramatically. We've gone from a steep inversion, meaning that shorter implied volatilities, I should say, were significantly higher than longer-term implied volatilities. We were talking about VIX in the 30s. It had really seemed to have settled into a range above 30, which generally signifies nervousness. If you've been following me for a while, you know that I'm not a believer that the VIX is truly the market's fear gauge, but instead that it plays one on TV to a certain extent. But it does have some meaningful value in terms of being able to interpret market sentiment. So the fact that we, over the course of, call it 2 weeks, have dropped from over 30, solidly over 30, to now we had an 18 handle this morning. Now we're creeping back toward a bit 20. But in the current environment, below 20 sort of represents a more sanguine market. And more importantly, the shape of the curve, as you go out the curve, volatility increases, which is a much more normal situation. What does this all mean? It means that sentiment has turned on a dime, as I've mentioned. We've seen speculation return in all sorts of formats. We've seen Bitcoin rise, not necessarily to its old highs, but it erased its losses for the year. That's been a big barometer of risk sentiment. We've seen meme stocks come roaring back. I wrote about this last week. I mentioned that if I wanted to get a stock moving, what we saw in terms of Ryan Cohen's purchase of 100,000 GameStop. Talk about getting bang for the buck. There are ways to do it quietly. There are ways to do it about as noisily as possible within the framework of the rules. He did the latter to great effect. It's now moved over into AMC and a whole bunch of other stocks. The speculative fervor is back. The love of the market for tech stocks is back. Apple, as of now, is up 11 straight days in a row. That's remarkable to have that kind of consistency. So the sentiment has flipped on a dime. My worry now is that the sentiment shift has gone too far. I do question how much of this is end of quarter effects. I think you had a lot of. I think that the buying was originally an oversold bounce, and around the Fed meeting, we talked about it before the Fed meeting that the market seemed ripe for a bounce after the Fed meeting. Now what we're seeing, I think it may have gone too far, but that remains to be seen. But the fact that sentiment has now flipped almost completely from extreme nervousness to relative complacency may bolster that idea. Remember, we're still talking about an environment where the monetary tailwinds are switching to headwinds. It does require a different way of thinking. But again, in the short term, this is working out for you. But as we get into quarter end, I think institutional considerations come into play. I think a lot of institutions are playing catch up. They'd sold out their equity exposure to a certain extent where they were carrying too much cash. You get into the quarterly end of the quarter where they have to report their holdings on their books, and all of a sudden they don't want to look like they're not holding cash because the markets are acting well. So these are the kind of changes you get. So it wouldn't surprise me if we continue to see a bit of an institutional backstop into the end of the quarter, maybe into the end of the week, because that's the first of the month, and then we'll see where that takes it from there. By that point, we're in earnings season, and we'll have a whole other round of discussions. But in the meantime, markets reacting positively to good news, less positively than they had been. And somebody somewhere seems to have given the all clear sign for everybody to get back in the pool. We'll talk again soon. Take care. Bye-bye.